If someone were to come to you, maybe pivoting from another part of insurance, or considering coming into the insurance industry, what kind of advice would you give them in terms of having a successful career in the insurance industry? What would you recommend?
Well, I always recommend to everybody, I already mentioned this, that they read Moneyball and think about it from that standpoint. But I'm also a big advocate of the basics.
Okay.
And understanding not only your own line of business, but other lines of business. Because, talking about cyber exists because of gaps in traditional policies in the coverage they were providing. The property policy covered direct physical loss, but didn't cover loss of income arising out of a data breach event or arising out of a ransomware type of event.
Mhm.
So cyber kind of filled that gap. Similarly, the general liability policy didn't cover a lot of things arising out of a data breach event because it's bodily injury and property damage focused. So, these were all opportunities for a whole new product, whole new line of business that literally didn't exist 25 years ago, or barely existed 25 years ago. But, understanding how those products work and really makes you a better cyber underwriter and makes you a better underwriter overall, because the more you understand how other underwriters underwrite, it kind of gives you another tool in your toolbox. Let me give you a quick story.
Okay.
Here. One of my favorite underwriting lessons that I learned was when I was a property package person, we did a lot of auto. And when we did auto, we'd get the driver's license record for every driver the company had. And we'd go through those records, and if we found people that had drunk driving convictions, we weren't going to write them. So now we're declining to write the auto. Well, someone came along and was like, are these really bad risks? Does that really correlate? If someone has a drunk driving conviction on Saturday night, does that make them a bad driver on Monday morning when they're driving for the company? And they figured out that they were able to get a lot more money for these risks because other insurers didn't want them, have kind of restrictive terms, and they ended up making a lot of money by, in a way, they kind of use data better, right?
Exactly.
So, that's the kind of way I think underwriters should look at things and, look for opportunities where conventional wisdom may not be so wise, right?